May 16th, 2023. I thought the context for the day overall made it pretty unlikely that we were going to get another strong bull trend. Generally, after, oops. If you look at how climactic we've been over the past couple of days, you can see that, I mentioned when I made a review on, I think, Tuesday, that if we were going to make a move up to the all-time high, it was probably going to be pretty climactic. And we did end up getting it, and it is pretty climactic. So, this reversal bar here, I think sideways to down for at least the next couple of days. We'll probably close this gap. I think this is an exhaustion gap, not a measuring gap. So I would expect us to get back down to this May 14th price. Bar one, a bull bar, but a big tail on the top. Not as good as it could be. I think most likely we're going to go sideways on the open. Follow through on two, but again, a big tail on both sides. Overall not very good. And then we had an inside bar, bar three, and an inside bar, bar four. So when you have an II on the open, there's a low percentage chance that it just ends up being the low of the day and we just rally straight up all day. So if you buy above four and put a stop below one, I don't know, maybe 30% chance that that's going to be the, I actually need to add that to my, 30% chance that this is going to end up being the low of the day. Bar four or bar five, kind of disappointing follow through. Relatively expected. In general, when you have a prior day as a bull trend day, 50% chance that you're going to get some sort of follow through buying on the open, and 75% chance that you're going to get at least 2 hours of sideways to down trading starting by the end of the second hour, like we obviously got here today. 6 buyers below 5 for the bulls. It's a high 1, but it's not all that good. It's just a big doji bar. We have consecutive doji bars, and then a disappointment bar on 7. And what's really interesting is a lot of the bulls who bought above 4, maybe they're trying to hold for a swing. This wasn't great follow through, but 5 is still technically follow through for bar 4. So if you had bought above 4 and you get 5, it is technically follow through for the bulls. And then another bull bar on 6, so good for the bulls. But then 7 is a bear bar and an inside bar. So I think if you're long, this is disappointing. And if you had bought above 4, this is your entry price. And you can see that's right where traders started selling on 8. When traders started selling on 8, it was because they were disappointed in the way 7 closed. 8, a big bear bar, it was a big bear bar at one point, but got bought up. And look where it got bought up is at this high. So the traders who sold here and scaled in higher were able to make money on bar 8. So I thought that was really interesting. To me, this big tail and the fact that these bears who scaled in are not trapped and they were able to make money, it tells me that this day is most likely going to be a trading range day. 9, a good bull bar, but a big tail on the top, so not as good as it could be. And 10, follow through, but again, a huge tail. So this is not ideal price action for the bulls. There is something important that happened with 10 though, and it's that it had an open gap with the 2 high. So the bulls who sold above 2 and they scaled in higher, or the bears who sold above 2 and scaled in higher, initially were trapped, right? They sell here, and you can see they were never let out during bar 10 or 11. So big tail 10, big tail 11, and then disappointment on 12, a bear bar closing near its low. Do you sell below 12? I don't think so. I think it's better, probably exit longs, but I don't think it makes a lot of sense to get short. I'd rather wait for a second leg sideways to up. Bulls do have the open gap still with the 2 high, which I thought was really, really important at this point in the day. We might end up getting a small pullback bull trend day. It's unlikely, probably on the open of the day, only 25% chance of that. But if this gap stays open, that the odds of that are increased. 13, a disappointing bar. You can see any of the bulls who bought any time during 11, disappointed 12. You can see 13, big tail. 14, buyers below 13 and big tail on the top. I am very, very tired today, by the way. I'm not really sure what's going on. I think, I've just been working too much. But so sorry if this review is a little fuzzy and I'm a little all over the place with my wording of things, but I'm trying my best. 15, a big bull bar closing near its high. Good for the bulls. So we still have this open gap, and now bulls are trying to create another open gap. And a disappointing bar on 16. If you look at 15, it's pretty climactic. So you see that, and you start to think to yourself, well, I'm not sure I want to buy all the way up here. But in reality, I think that buying up here is okay, but you have to keep in mind that it might not be a small pullback bull trend day. The context on the daily chart does not support that. Doji bar on 16 and then outside up 17. So we have a second open gap here. So we have the first open gap here. And now we have a second open gap as well. So the bulls have two open gaps and we're rallying. So good for the bulls. A climactic bar on 17, on 18. And when you see 18, what were traders hoping for? The bulls were hoping for something like this, essentially some sort of wedge pullback to the moving average and then a rally. But instead, what we got was a disappointing bar 18. So, most traders know at this point that we're probably going to start to go sideways soon. And we just have the big tail on the bottom, or sorry, failed breakout of the 18 bar range on 19, big tail on the top, and 20, a bear bar, but a big tail on the bottom. I think probably more sideways. 21, a huge bear bar, but a big tail on the bottom. But 21 changed the entire day in my mind, because when it's a trading range day, you expect gaps to close, versus when it's a trend day, you expect gaps to stay open. And we have two open gaps at this point, right? We have an open gap here and an open gap here. And at this point, up until we saw bar 21, I thought possible small pullback bull trend day. Except then when we see bar 21, I now think trading range day. So what do traders want to do? Well, they want to sell and they want to, close the gap with the too high, but they want to sell a little bit higher. They don't quite want to sell the market on bar 21. They want to sell somewhere up here. So you get a disappointing bar 22. Traders don't really want to sell at the close of 21 since it's one of the first bars to touch the moving average in a while, and we're probably going to get some sort of bounce. 23, a bull bar, but a big tail on the top. You can see there were initially sellers above 22, and then a huge bull bar closing near its high 24. Follow through 25, but sellers probably somewhere up here. Consecutive bull bars, but I think that I thought we were always in long coming into the day just from the prior day, and then we got a lot of follow through. So still always in long throughout here, but I thought 21 had a chance at making the market always in short. 26, so 24, 25 consecutive bull bars, probably going to get a lower high from the sell-off down to 21. But good consecutive bull bars for the bulls. However, these are more sell the close bars than they are buy the close bars. I think 21 changed the day, so now I think trading range, so 24, 25, I'm not really eager to buy up there since I think probably more sideways. 26, a big bear bar, but a big tail on the bottom, and a reversal up on 27. It's kind of, high one, high two in a way, but I don't really want to buy above 27. I think that you're buying too high. And instead you get an inside bar 28, so it's an II 27, 28. I would just rather wait at this point. You can see we have a triangle forming here. I would just rather wait for the breakout. Failed breakout below 28 on 29 and a reversal up, and then failed breakout above 29 on 30 and a reversal back down. So look at bar 30. What is bar 30 offering you? Well, you want to get back to the too high. That's the magnet. And bar 30 is offering you small risk. So you're risking, when you're in a trading range, traders don't want to risk too much because the probabilities are never all that great. So traders prefer to trade a lot smaller when they're in trading ranges. And if you sold below 30, you're risking, 2-ish points, about 2 points, trying to make 5 points or 5.25 points. So I think that's pretty good risk reward and a reasonably decent probability. So it's okay to sell below 31. And you can see that's why 31 got vacuumed right down to the too high, because the traders who took the trade knew that was the magnet and they exited. It's trading range day, so traders are going to be quick to exit. Bull doji bar on 31. It's probably a wedge, 17, 22, and 31, but I'm not really willing to take the buy above doji bar. 33, full follow through for the bulls, but really not all that good. I think we're probably going to go more sideways. 34, a bear bar closing near its low, but when you get a wedge, like it was to bar 32, what are you expecting? You're expecting two legs sideways to up. So I don't want to sell below 34 when I know I'm expecting a second leg sideways to up. 35, a bull bar closing near its high, potentially double bottom. 31, is it a good buy? Well, the channel down is pretty tight. So I think the thing about 35 is if you're going to buy above 35, you have to be willing to buy more below 35. You can't take the buy with a tight stop and get stopped out below 35. I don't think that makes a lot of sense. It's a trading range day, so it pays to scale in on limit orders. So that the 8 high is also a magnet. Another point is buying above bars like bar 8 does not usually lead to big bull trends. So the traders who were taking that sort of buy knew that most likely we were going to, that's not what I meant to say. Bars like 8 do not usually lead to big bull trends. So it made it even more likely it was a trading range along with all of the other things. So do you want to buy above 35? Only if you can buy more below 35. You notice we're accumulating reasonably decent bull bars like 24, 27, 29, 35. So I thought it was possible we had to test all the way back up to the 29 close. 36, a bear bar, but I'm not selling below it. I think that we're probably going to start to go more sideways here. And then we got buyers below that 35 low. It's a wedge channel, 32, 35, 30, 37. And, is it a buy above 37? Probably not. I think just better to wait. 38 triggers above 37. So 37 is the signal bar. And then follow through 39. Do you buy above 39? I think you can. We're probably getting back to at least the one tick above 35, and we might have to get all the way back to the bar 29 high. 40, a big doji bar, and then a bull bar 41, but it's breaking above a channel, and it's breaking out to basically the top of the wedge, or the top of the wedge channel, which was bar 33. When you get to the tops of channels, you generally expect there to be sellers. 42, a bear bar, but a big tail on the bottom. And then 43, a bear bar, but again, rather disappointing, and a bull bar closing near its high 44. So I'm not buying 41. I'm not buying 44 either. I think it's too high in the range. What's your profit target, right? Best case scenario, you get up here. That's your, absolute best case scenario, buying above 44. I don't really think it's all that likely you're going to do that. If you're buying up there, you're pretty much getting a little better than 1-to-1. But you're buying so high in what's going to end up being a trading range, and your stop is relatively big. 45, it's a bull bar. It's technically follow through, but is that really the follow through you wanted with this large of a tail on the bottom? No, nobody wants to buy above 45. I think that this is probably a wedge 1, 2, 3, or 1, 2, 3, something like that. I'm not saying I would sell 46. I wouldn't. It is a wedge, but I would not take that sell. But point being, I think it's better not to take the buy above 44 or 45. 47, a big surprise bar down. When you get a bar like 47, 60% chance you're going to get some sort of measured move down. Doesn't mean it's going to be, the measured move you want, but we did get a leg 1 equals leg 2 down. Leg 1, pullback, leg 2, and that's where 58 reversed. 48, a big disappointing bar. About 2 minutes into bar 48, it was on its high, or it might have been like 2.5 minutes in. And if you think about it, that's around a 50% pullback. And when we're this high up, around 2 to 2.5 minutes in the bar, traders know that there's still a lot of time left for the bar to finish forming. So a lot of them, what they'll do is they'll sell the market around 50% and just basically try to make a scalp back down towards the 47 close. If 48 closes on its high, it's probably not going to get much bigger than it currently is. So the trade, the risk, you probably put your stop above like 46. But the reality is it's never getting hit. It's very, very rare for that stop to get hit after this big of a move down. It probably needs a second leg. So you get out if 48 closes on its high, you just get out above it, and it'll usually be around your break-even price. So a lot of traders would take that sell, I think, and that's why we sold off. A lot of them, once 48 closes here, what did they really want? They wanted for 48 to sell all the way off and be a bear bar and be follow through. Instead, it wasn't follow through, so they exited at the market with a scalp, and that's what causes the bounce on 49. 50, a bear bar closing with a big tail on the bottom. We're always in short, and bears want to break out, but important that 47 was not able to break out of the low of the day, and disappointing follow through 48. 50, a bear bar, but a big tail on the bottom, and then 51, again, another essentially failed breakout. Or sorry, we didn't quite get the breakout. Tried to form a double bottom here, but not really all that good. Again, it's going to be one of those areas where it's better to buy below than above. 52, you can see we had buyers below the low of the day. Disappointing with a big tail. Traders probably buying and scaling in lower here. And then 53, a huge bull bar, but I'm not buying this high. I don't think it makes a lot of sense to do so because, what's your best case scenario? You get a bar of follow through, but then you're somewhere up here, and that's a problem as well. 54, disappointing, double top 48. So I'd rather just wait. And then 55, a bear bar closing somewhat near its low. I think 55 is an okay sell. I was going to sell 55 until it traded below 54 in the last couple seconds, and that made me hesitate. But I still think 55 is an okay sell. The way to view it would be 47, a big bear bar, so needs a second leg down, and we get a 3-push pullback, 48, 49, 51, 53, 54 as the wedge pullback, and you can sell below 55, especially since it closes near the moving average. Now, you get follow through 56, good for the bears, and then a huge bear bar closing near its low 57. 57 is more of a buy the close bar than a sell the close bar. The traders who are selling down here are, it's really hard to do because you're at the measured move, right? 1, pullback, 2, and a huge bear bar closing near its low 57, a wedge 48, 52, 57. So those are all problems for the bears, and the risk is huge, right? So if you're going to take a trade with a lot of problems, like traders do in trading ranges, like you have to, then you want the risk to be small, and the risk is not small. So instead, what you want to do is buy above a bar like 58. So what's the target if you're buying above 58? Well, there's a few things. One, it's a wedge, so I think that 60% chance we're going to get two legs sideways up here. Does that mean that we're going to, get a huge rally? No, it's probably more of a scalp. But if you buy and you're going for 5 points, that's around the 54 low. So the bar 54 low is a reasonable target since bulls would have bought below and scaled in lower. I think the open of the day is always a reasonable target on a trading range day. And there was one other really important thing. When bar 47 closed and then we got the rally, it did not overlap with the bar 37 low. Or sorry, when bar 47 low closed, it did not overlap with the 37 low. The pullback didn't. And then we got the new low. So this is an open gap the same way this was an open gap. And I expect this open gap to close. So you can buy above 58, hoping to get to the 37 low with, I think, a pretty reasonable, probably like a 50-50 chance of doing so. And that's around 2-to-1 of your risk reward. So I thought really, come on, I thought really solid buy above 58 and, reasonable enough chance you get a swing. Follow through 59, good for the bulls. But some traders just make the quick 2 or 3 points and they'll take the scalp. That causes 60. When 60 is trading down towards the 58 high, a lot of bulls are buying above 58, or buying the high of 58 during 60, trying not to let it trigger, or trying to buy it back up so that 60 does not close on its low. 61, 62, 63, good follow through for the bulls, but now we're at the 54 close and sell climax high, the 55 high. And it's kind of counterintuitive to sell 57 and put a stop above 54 and just let it get hit. You can't do that. Because in trading range days, the things that would be good to do in trend days are kind of the opposite. So rather than selling there and putting a stop above 54 and being frustrated when your stop gets hit, it makes more sense to buy above 58 and put a limit order to take profits above 54. 64, a disappointing inside bar. 65, a bull bar closing near its high. It's a high, essentially a high one here, but a good micro channel for the bull. So probably another leg up. It might be a third leg up in a trading range though. At this point, I think we're looking for this 37 low, and I would just take profits once we get there. And you can see that's what most of the traders did, and that's probably what's causing this sell off. 77 was a big vacuum test of the open of the day, late in the day, but I think that if you're gonna, I think it's better not to trade it and to just be flat over here. The daily chart, like I said, really interesting. Bear bar closing near its low. You can see the bulls were fighting to try and keep this day some sort of bull close, but instead we end up getting the big bear close, which means most likely we're going to find sellers below here. I think this trade here is similar in a lot of ways to this buy here, because I think here 60% chance you're going to get a few legs sideways to up, and I think here 60% chance you're going to get a few legs sideways to down. It's a failed breakout above the all-time high and a climactic bar. I'm pretty sure we're going to test this exhaustion gap. So I'm pretty sure we're going to test this May 14th high, and that's the first target for the bears. Tomorrow's Friday, the weekly chart. Bears are going to try and put as big of a tail as possible on this bar and make it look like a trading range, which I think it is. And yeah, that's the day.